Tonight we're talking about Express Catering. Their Q3 results are out. What should we know?
So just a reminder to everyone. So I'll try and share a bit of screen. Hold on a sec. I have no idea if you're seeing. Hold on. All right, so I'll try to share a bit of the screen. So Express Catering, as most of us would be familiar with, actually does operations within the Sangster International Airport. And so your concession stands within that space would be Express Catering that is responsible for providing services and food in that space. So I think I'll try, see if I can, oh no, it won't share. What we're looking at for Express Catering though is it's a company that's highly linked to the movement of traffic, so the movement of persons within the airport. So once you think of Express Catering, you want to think about how is tourism doing, and that factors into the amount of persons that are passing through the airports, and that would likely be able to take up some of their services. So when we looked at the numbers that came out, so they were released on the Jamaica Stock Exchange earlier today. So when we looked at those numbers, and bear in mind we haven't gone in full detail because they're still very fresh numbers. We know that revenue pretty much has remained fairly flat. So there is a bit of sluggish growth in revenue. And it's one of the first items that we generally tend to look at when it is that we're assessing companies, which is that revenue item in terms of its performance. And it sometimes gives us, a very wrong picture of everything if it is that we just focus on revenue, because when we drill a little bit further down, we'll see that there's overall improvement in the net profit for this company. And what really has driven that is that they have been able to do some cost containment. So we see where for Express Catering, they have reduced their cost of sales. So that would have fallen year over year, and that would have resulted in an increase in the gross profit. And when you look at gross profit, you don't just want to look at the numbers, you also want to factor in what's the margins like. And this is something that we'd have discussed in COVID when it is that we saw companies that were reducing some of their costs, and when it is that there are tough times, and then they're started to see an improvement in the margins. I'll try and share, had a little Excel sheet. Let's see if I can present that one. Let's try again. Cheers.
Let me take some comments in the meantime. I see. So Learn, Grow, Invest. By the way, guys, how was your conference this past weekend? I saw some highlights on social media. Unfortunately, I was unable to attend, but big up you for pulling off that conference. As Learn, Grow, Invest says, on that note, waiting for JPS to list. They have preference shares listed, but the big company, that would be a big one if that ever happens. Have you gotten the document?
Are you seeing? Yes, there we go. All right,
Yeah.
so I have highlighted in green what would have been the margin. So we know that you have a gross profit margin.
You're going to have to zoom in on the parts that you're talking about. There we go.
All right. So when we look at gross profit margin here, that's 71.9%, roughly 72%, compared to year-to-date last year, which was 67.9%. And it seemed like very close numbers, but when you're talking about margins, even decimal places, improvement is really good. So to move from 66.9, or call it 67% to 72% is a really big jump. And a lot of that really came because there was a reduction, as I mentioned, in the cost of sales. So they were able to, even though revenue was just moving up sluggishly by 1.1% year to date, 4.8 Q3 over Q3, when you look at the cost of sales, there was a big dip in terms of about 14% for the year to date. So that's the 9 months ended at the end of February. And once we drill further down, we noticed that
how are they able to reduce cost of sales by that much?
So part of what they would have explained in their discussion is that they were able to look at in terms of their suppliers, was part of it in terms of how it is that they were able to probably negotiate. And so you want to look, as earlier would have discussed with your in your earlier segment when you talked about businesses and management. It's really key that you have an eye on what it is that management is doing, because your business has to survive in both good and bad times, and how it is that they're able to change around and refashion when things get a little bit sticky. You have to realize that comes into play here. And I think they would have see if I can just touch back on the notes. Should be seen. Let's just see. They would have highlighted in terms of their cost containment measures. So I think one, when we get a little bit further down, they're able to do some savings in terms of salaries and wages. But they also did a bit of price combination as well as better portion controls, and they were improving the supply chain agreements. And so those would have been what would have helped in terms of the overall performance for the company in terms of an improvement there.
Okay.
But when we also look further in terms of the margins, we notice that you look at even the net profit margin, that's also improved. So it's moving from 11.2% last year to 17% this year. So if you look at that jump in terms of net profit, it's a much different story from what it is that you would have seen when it is that you looked at the revenue, which would have been the top line. So you also always want to factor in what is happening within the company. How are they adjusting to any sort of changes that's happening within the market? And when we look at tourism numbers, so if we looked at last year, there was a travel advisory that was issued, and so we saw a reduction in tourist arrivals. And then later in the year, as the persons, our main source market being the US, persons were really preparing or looking forward to the election, and there was a bit of a wait and see. So persons were really saying, let's see what happens in this election before I make some sort of travel plans. And so we realized that for most of last year, particularly as we got into the summer months and the early parts of the winter season, tourist arrivals were on the dip. And that would have been a big factor for, as we mentioned, for a company like Express Catering. It really depends on the movement of persons. And if it is that you're seeing that there is a dip in travel, you could do promotions, there could be work that is done, but that's just the overall nature of what's happening currently in the market. And that would have had an impact in terms of your numbers. So you had to be able to reposition or to fix your business in such a way that you're still able to produce a bottom line that is improving, even though your top line is a little bit on the sluggish side in terms of growth.
Yeah. So for them to have this improvement in the bottom line, it really comes down to how they manage the cost of sales and being able to reduce that.
Right. So I think there were some of the variable costs was a little bit down as well. As I mentioned, they did do a little bit of adjustment to wages and salaries. And so that would have helped. I think they dipped in terms of some of the promotional expenses, Q3 versus this year versus Q3 of prior year. And that would have helped in terms of cost containment. And that's something that I'd highlight for investors to be looking out, particularly as we go into a season where there could be a bit of tough times, as we see for companies, how it is that management is managing or weathering the storms as they come is one of the important gauges that we have to look at when it is that we're looking for companies that we'd like to invest in.
Yeah. Anything else that you wanted to highlight from Express's results?
I think, when we look at the outlook, so when it is that you look at what's likely to happen within the tourism space, it's still going to be a year where there could be a little bit of harms continuing. So there was improvement as it is that we went into the winter tourist season in terms of the pickup of the numbers. But when you look at the information coming out in terms of arrivals for the start of this year so far for Montego Bay, we're noticing that there is a bit of a dip year over year. And so it's going to be, if we use the start of the year as any sort of indication, it's going to be another tough year for the top line for Express Catering. But if it is that they're able to maintain the same margins that they have been doing year to date, and probably see similar sluggish growth in terms of revenue, then it's likely that they could beat the performance for last year financial year. The audited numbers could be much better than last year if it is that they're able to maintain those margins going into Q4, even with sluggish revenue.
We have a couple of questions before we move on to the inflation numbers. Jason, well, this is a comment. Jason says ECL, Express Catering, and Dolphin Cove could see a drop in prices as the tariff wars intensifies. Do you see that having an impact on Express Catering? Because the tariff wars are really about imports into the United States. Express, right. We're looking at travel, tourism industry.
I think it could have an impact in terms of if it is that person's probably delayed travel based on, what it is that they're seeing playing out. So persons could, similar to as we mentioned, when it is that persons were leading up to the election, there was a bit of a wait and see. So persons were really waiting to see what is likely to happen before it is that they concretize their travel plans. You could see a bit of a shift there in terms of persons deciding whether or not they would make travel, and how it is that they, just a general level of uncertainty sometimes can impact your decision to travel, or how it is that you do spend in terms of travel. So it could
Yeah.
be a factor.
Earl wants to know who or what makes up the related party transaction in the balance sheet and why is it so high? Each year it climbs. Is there a disclosure on that? Does it say?
I think there would be one, but I think the related party, as in this case, Express Catering, is the Margarita Limited. That company is highly related to this one. So that would largely, I think, depend be what causes that movement in terms of related party expenses or related party holdings.
Okay, let's move on to inflation. The new inflation numbers were just announced. We're at precisely 5%, which is exactly the BOJ's target. And this is the seventh month that they've been able to hit their target. So, do you think that this is going to influence the BOJ to drop interest rates, or because they've hit that sweet spot, you think this is where it should stay? Interest rates should just stay the same because they've been at 6% for a few months now.
Right. So, I mean, as I mentioned, that target is 4 to 6% that the BOJ wants inflation to fall within. And it has been within that 4 to 6% band for quite a bit of time. And we do continue to see where the BOJ is holding. We have another month or so to go. I think the next meeting for the BOJ is in May, at about towards the latter part of May. So we'll be able to factor in as well as the April inflation numbers before it is that they have to make a decision. What it factors into their decision to hold, as they have been highlighting, is that there is general uncertainty in the market, and those uncertainties could have impact for inflation. And because that could have impact for inflation, they're really doing a watch and see to see what happens. So how it is that a lot of the international decisions play out will have an impact as to whether or not it is that the BOJ decides to move the policy rate.
Yeah, a lot going on. And then I just saw a comment come on screen that the hurricane season is coming up a whole
Yeah.
half of the year, June to November, June to
Yes.
November,
Well,
hurricane
actually,
season,
I
June
think
to
it's
November.
actually extended, where once you get into December, they're now saying you could have hurricanes or active systems in December. So I mean, you probably can't say it's the full calendar year
We've
at some
seen
point.
in recent times hurricanes outside of the hurricane season. And
Yes.
also remember, Beryl was a July hurricane, category 4, one of the earliest
Right. So
big
it's more
hurricanes.
frequency, and I think the intensity is also much greater than we have been seeing.
Climate
Yes.
change is real. I have a question here from O'Shane. O'Shane wants to know, why is 4 to 6% or 5% inflation target good? Isn't that too high?
So one of the things is that prices generally move upwards over time. So you don't want to be in a situation where there is no upward movement in prices generally. So what they tend to set is what is considered a fair banding, which it is that they'd like to see inflation to make sure that there is stability within the market. So one of the things for the target is to help in terms of planning. So companies as well as individuals plan for the year ahead. So when it is that you have an idea of where it is that inflation is likely to fall, then you can better make some of those planning going forward. So it's really not just in terms of where it is that you'd want to see the market, but also to help in terms of some sort of stability in terms of how market perform, how it is that persons are able to plan. And so a 4 to 6 really represents the general target. So that would have factored in how it is that inflation would have moved in prior years. So they would have looked at historical information on inflation. They'd look at our typical market, considering that we are somewhat price takers in quite a bit of products that we import. Then they would have factored in those factors to determine a favorable band that they'd want to see inflation fall into. But there is generally a need for some upward movement in price within the economy. And you also want to remember as an individual that your salary is a price. And so if there's no upward movement in prices, then your salary also stays, flat. So you want to
I,
consider that your salary is also a price.
I remember asking that question a few years ago when the BOJ initially launched their inflation targeting regime, because it really depends on your economic circumstances, because 5% in the US would be considered high. They're looking at, I think, probably like the 2% range
Yeah,
for
that's their target,
targeting.
around 2%.
But for us, as an emerging economy seeking growth, 5% is kind of the sweet spot for where they want it to be. I remember talking to Richard Biles. Was it Richard Biles then? Was he already? I think he was already central bank. No, it was Brian Winter. Brian Winter was the central bank governor at the time that they launched the targeting regime, and he, explained all of that as to why 5% is ideal for an economy like us. Remember, we also had the target for 5 and 4, looking to achieve 5%
Oh, yeah.
growth in 4 years. 4 years gone, long time, and it hasn't. We still haven't achieved that. But I see in the comments as well some people saying 5% is a good number, because keep in mind, how much do you want to grow by? Do you, like you mentioned, Jodian, if your salary is 100,000 this year, you want it to be 105,000 next year, that's inflation. That's a rise
It is.
in the cost to employers, as a rise in the cost of goods and services. So yeah, lots of reasons for the 5% number.
Yeah, but I mean, it's generally good to see that there is some amount of stability in terms of the numbers. So when it is that you're looking at the numbers, outside of just seeing it, whether it is within the band and the BOJ movement, it also helps in terms of for companies to know that there's a general level of stability. As I said, it helps in terms of how it is that you plan going forward, when it is that you're preparing a business plan or you're doing a budget for the following year, to make sure, in terms of that variance, when you look at actual versus planned, it reduces that. So it helps very much in terms of your planning and how it is that you prepare for going forward. And I think for us as analysts, when it is that we're looking in terms of long-term growth rates, when it is that we're doing projections for companies, having a general idea of where it is that inflation is likely to fall, or seeing a general level of stability, helps in terms of how it is that we work towards preparing those projections and doing our evaluations.
Jason says BOJ may be wise to delay dropping the rates further. Do you agree with that?
Well, we'll have to wait and see. There's another month of data that they'll be looking at, as well as the uncertainty within the international market. So we'd want to see how a lot of that plays out, and that will inform how it is that the decisions that they make. I think part of what general markets would want, and particularly when you look at the US, there's a general push or from the investment public, for a cut in rates. So when you look at where it is that they're projecting rates to be towards the end of the year in terms of market expectation, you're seeing that is quite a bit of an aggressive reduction. And, that leads into the fact that it helps to support economic activity. So the lower your rate is the more likely that persons are going to borrow. It stimulates activity. So from that end, there is a general wanting to see a reduction in the rates. But we do have to factor in that inflation. As I mentioned, we want it to be something that is fairly stable and predictable. And if there is going to be anything that could have an impact in terms of bringing back inflation outside of the band, particularly above the upper end, then the BOJ would be very cautious in order to remain as a space where they're likely to be having rates high, so that they could have some amount of containment if it is that situation should arise.
A question from Desmond. He says, but would your salary need to increase if other costs aren't?
Well, I think in terms of generally just prices on a whole, so generally prices tend to go up, and you do not necessarily want to be in a situation where prices are going down, because if prices are going down, still on a human level, on a psychological level, even if you may require less funds to purchase the same amount of goods, nobody really wants to see their inputs or their income going down. And so when you think of it probably from the flip side, then it probably seems a little bit more intuitive in terms of if it is that, the cost of things are to go down, then it means that your salary moves downwards is not necessarily a good on a psychological level. And so in terms of prices going downwards, that's not really something that you particularly want to factor in as well in your economy. So there is a general uptick in prices that is generally needed.
Lots to think about. Thank you so much for your expert analysis, Jodian.
No problem.
Great having you.